Forever blowing bubbles springs to mind, Jeff. I think probably easiest to say. I think last time I was on, I talked about the value trade, and the value trade here being defined as anything that wasn't working from home stocks or technology in general, actually, and some fear about the IPO frenzy. You look at what we've done in the first 2 months. If you haven't owned a bank and you haven't owned an energy company, you haven't really been in it at all. It's been very, very challenging, I think, for a lot of the active community. And it was signaled last year, but the fact the active universe really did quite well against the indexes last year, and that was really because of the concentration on this growth piece. And playing to what you said earlier, no one really knows what the effect's going to be if the sort of work at home becomes the work at work again. And I think it's really interesting to see that most of the trades that people have been placing, that we're talking to, it's the pure recovery trades, the retailers, the airlines, the travel industry is one part of it. And then it's the financials of all flavors. It includes the asset managers, the insurers less so, the banks in particular. So the market's anticipating the big underlying change. And it shouldn't, I guess, be a surprise. We've got massive pent-up savings. We have given away and have engineered, particularly in the US, but elsewhere as well, the most amazing fiscal and monetary stimulus, unparalleled. And then you have 25% money supply growth, which is the first time we've really had that since the 80s. Now, the assumption, therefore, is that finally the money velocity, the really big thing, will change because of these, let's go big, quote Yellen and Powell. And you would anticipate the goal, which is a massive increase in nominal GDP, which is what everyone's looking at. And the statement from Powell, very clearly, I will go for the poorest person in the poorest state in America as my benchmark for the definition of full employment. So I think it really has to be understood this is a massive change. We've taken the Corona war and we're turning it into a war on inequality. And it's being led by Biden. It is a massive change in emphasis. And I don't think it's really understood. It's almost the end of Reaganomics. And I go that far. This is unprecedented spending in the United States. So it does have really serious implications for two things. One, if it doesn't work, we're all Japan. And two, if it does work, we're going to have substantially higher rates of inflation. That will be a consequence of really targeting substantially higher nominal GDP. So the market's behaving rationally. It's selling off those things that have priced into the long duration earnings. Well, you want shorter duration when the bond yield is going up, and particularly when it's steepening as aggressively as it is. So far, the market is logical.